I've been trading for over 5+ years now and have tested hundreds of different strategies: supply and demand, ICT, SMC. Traders believe that there is no other way to become profitable if you don't trade these concepts. Problem is, majority of these concepts are overly complex and don't work. I've come to the realization that complication equals unprofitability. I've made over 6 figures consistently over the past 3 years, and in today's video, I'm gonna break down step by step my break and retest trading strategy that has allowed me to trade full time for a living. I'll be breaking down everything from A to Z, what you need to know about the break and retest and how to properly trade it. I'll be going over the 3 different types of break and retest that I look for on the higher time frames to 2 intraday setups that I look for on the lower time frames. I'll be going over rules within the break and retest, displacement, entry criteria, stops, targets, just everything that you need to know in order to become profitable. So with that being said, let's get right into the video. So in today's video, I'm going to break down everything you need to know about the break and retest. And it starts off with identifying these 3 break and retest patterns on the higher time frames. So essentially, I look for these 3 break and retest patterns every single day on the higher time frame. The first one being is the classic continuation break and retest. So what essentially we have is price forms a low, then what we have is a higher low, and then we have a break above our key resistance level. Price then comes back, retest this key level, and we can look for long positions back towards the upside. So this is essentially your classic break and retest where previous resistance turns into support. So what this is a continuation of the trend. Next, what we have is number 2, which is a consolidation break and retest. So what we have is basically price forms a range, right? It's consolidating in the market. It's creating highs, it's creating lows. And what we have is price is inside of a range. What the consolidation break and retest looks like is when price breaks above a key resistance level, being a consolidation high, we come back and we end up using this level as a retest for a push towards the upside. So both of these break and retests are classified as higher time frame patterns, and I look for either the continuation or a consolidation on a daily basis. And number 3 is the flat top break and retest. This is one of my favorite break and retests. What occurs is that we have a flat top. So we have multiple touches right here. As you can see, we're forming what's called a flat top. Price then breaks above our old previous resistance, and then we can essentially use this level as support for that continued push towards the upside. So this is another pattern that I use on a daily basis. So if you see these patterns setting up on the higher time frames, this is a good sign that price is going to have continuation either towards the upside or the downside, depending on what the higher time frames is doing. With this being said, let's go on to some chart examples to really solidify what this looks like. So as you can see right here, what we have is our first example on the chart. We're on the NASDAQ here. You can see that price is right now is currently in a downtrend. So we're making lower highs, lower lows, lower highs. What we really want to see price do is break underneath this key pivot low that it formed right here, retest, and we have that continuation towards the downside. So as we play the tape, what the level we can have marked out is all the way down to here. So now you can see we have that big displacement towards the downside. We broke underneath this key pivot low. So what we would like to see is now this area essentially be used as resistance for that continued push towards the downside. Since we're in a downtrend, this is the continuation break and retest. So what we can do is mark out this whole area, and now this area be used as a retest towards the downside. A lot of people ask, right, do I draw it a level? Do I draw it an area? I personally like drawing out areas because it gives it a little bit more room, especially on the higher time frames. So once you go into the lower time frames, you can get those nice precise entries. So if we keep playing out the tape here now, you can see that price finally taps back into your key area, which is your previous support, turned into resistance. And now what we can expect is that continued push towards the downside. And as you can see right here, we end up getting that nice leg towards the downside. So this is the continuation break and retest towards the downside on the higher time frames. Now let's go into another example. So now this is going to be a continuation break and retest example towards the upside. As you can see here, we're making higher lows, higher highs, higher lows, right? So we're in a clear uptrend towards the upside. What I'd like to see now to confirm that clear uptrend is a break above this key pivot high, a retest of this key pivot high or a previous resistance turn into support for that continued push back towards the upside. So if we play out the tape here, you can see we finally get that push towards the upside. We have a strong push, right? Displacement. I'll talk about displacement more later in the video, but we have a strong candle closure above this key pivot high. So now this can be used as a valid retest for continuation towards the upside. So you can mark out this whole area as I mentioned earlier, and now we can essentially look for the retest of this level for that continued push back towards the upside. And you can see price finally comes back down in towards our key area, which is our break and retest on the higher time frames. And now what can we expect is that push back towards the upside towards these key highs now on the higher time frames. And you can see right there, price ended up gravitating back towards these equal highs on NQ, which would have made it for a very nice trading opportunity. Also go over my exact entry criteria and how I actually enter in the break and retest later into the video as well. So with this being said, let's go into the next higher time frame pattern that I look for on the break and retest, which is the consolidation break and retest. So as you can see right here, we're on the consolidation break and retest right now. And you can see there's a decent amount of consolidation ranging in between these highs and lows in the markets. As you can see right here, what we have is called a range. So we're in between the swing highs and swing lows of a range. And what we want to see for the consolidation break and retest, either one, a break above the range towards the upside, a retest, and then we have a continuation towards the upside, or we want to wait for a break below the consolidation and then look for the retest towards the downside. So let's play out the tape and see what happens. So you can see right here, we're now closing above the top of the range. So what we're going to be doing and looking for now is the retest of this key area for that continued push back towards the upside. So now you can see we end up using this previous consolidation area, the resistance, end up turning into support as you can see right here. And now what we'll be looking for is that continued push back towards these highs. And as you can see right there, we end up taking out this swing high. That's usually always where your target's going to be. If you're going to be looking to take the break and retest, you're always going to target the first swing high as your first target, and then you're going to be looking for continuation. So now let's go on to another example of the consolidation break and retest. So currently I'm on the ES, and you can see there's consolidation here on this 30-minute chart. We're in between the ranges as you can see right here. And what I like to see for downside is a break underneath this consolidation, retest, and a continuation towards the downside. If I was bullish, I want to see a break above this consolidation high for a move back towards the upside. So let's play out the tape. So you can see right here, price is having a very strong candle closure underneath this consolidation period, confirming that price is now indeed bearish. What I like to see is the retest of this key level for that continued push towards the downside now. So you can see right there, ES, this is our previous support now turned into resistance. You can see there's a lot of selling pressure here at the bottom of the zone, confirming that price should indeed head towards the downside here based off this candle and based off what price is doing. So now let's see if price ends up heading lower. You can see we had another touch of the zone once again, but as long as we hold this key level, as you can see right here, price never had a candle closure back above our key area. And you can see eventually we ended up gravitating down towards the lows, and we had some more continuation towards the downside as well. So now with this being said, let's go on to my third and final break and retest pattern that I look for on the higher time frames. So as you can see, we're on the NASDAQ 1 hour time frame here. And what I'm going to draw out is essentially this flat top or this rising wedge, whatever you like to call it. There's different names for it. So what we have is multiple touches essentially creating this flat top area. And then of course we have our rising wedge. You can see we're creating our higher lows right here. And what we like to see for a bullish case in this example, for that continuation of the trend, it's going to be towards the bull side, a break above this key flat top, a retest of this level for that continued push back towards the upside. So that's what I'd like to see. You can mark out this whole zone and we can drag this over, and we like to see this play out for that push towards the upside. So now we'll play the tape. So as you can see right there, what we're having is they close above our flat top area. This previous resistance now I would like to use as support for that continued push back towards the upside. So now we can look for the retest. As you can see, we get the retest right here. We can look to go long, stop, break below the zone, and look for a 1 to 2. And you can see right there, price ended up tapping nicely once again right into our key area, and we have an explosive move towards the upside on the NQ for a nice push above this swing high and that continued push towards the upside. This ended up being a super nice flat top break and retest, continuation move towards the upside. So now let's look at an example towards the downside. So now this is going to be a bearish example of the rising wedge. This is essentially a falling wedge towards the downside. What we now be looking for is a break below this key level of support. So as you can see right here, we have multiple touches of support. As you can see right here, we're in a clear downtrend. We're making lower highs. What we'd like to see for a continued push, break underneath this key pivot low, right? A retest of this general area for that continued move towards the downside. So we'll wait for a break below this key area. You can see so far we're getting the break underneath this key area. As always, you can mark out this general area. So now what we can look for is the retest off this area for that continued push towards the downside. And you can see price, nice push towards the downside. We're now getting the retest of this area. Your previous support turned into resistance. Now we can expect that continued move lower. And as you can see right there, we ended up taking out this swing low. We also had more continuation towards the downside as well. So this was a great example of the bearish version of the rising wedge or the flat top break. I personally don't like to trade it towards the downside because the markets are designed to go up. So now with that being said, we're actually going to go on to intraday setups. What I just went over are higher time frame patterns. I like to look for these on the 1 hour and daily time frame. But if I'm trading intraday, right, I have different types of break and retest setups as well. So now I'm going to show you guys some of the intraday setups that I look for to be able to capture these higher time frame break and retest moves. So now we're back on the whiteboard here, and what I want to go over is 2 of my favorite setups intraday. Right, so my favorite setup that I look for on a day-to-day basis intraday is your previous day high break and retest. So on the higher time frames, what I'll always look for is if there's any patterns on the higher time frames, and then intraday wise, I want to see where price is at in relation towards your previous day high and your previous day's low. All I'm looking for is price to break underneath your previous day lows for continuation, or if I'm bullish, I look for a break above your previous day highs for continuation towards the upside. So this is one of my favorite things I look for, is the break and retest off your previous day highs and previous day lows. My second entry model that I look for on a daily basis as well, you guys might have heard me talk about this quite a few times, but it's called your opening range break and retest. So right here, this is going to be your first candle of market open. This is at New York session open at 9:30 a.m. Eastern Standard Time. And all I do is look for a break above, a retest, and a continuation towards the upside, or a break below your opening range for a continuation towards the downside. So you can see these are the exact same things, but on different time frames, right? The opening range break and retest and the previous day high and previous day low break and retest are the exact same. We're both looking for the break and retest, but these are on different time frames, and there's actually different criteria. So now let's go into some of the charts and see exactly what this looks like in real time. So right here, what we're going to be looking for is your previous day high and previous day low break and retest, and what we're going to have marked out is your previous day lows. So your previous day lows is your previous session's low, right? Your previous day. So you can mark out the low, as you can see right here. You can also mark out your previous day's high. So what we want to look for when trading this previous day high and previous day low break and retest is a break above, a retest towards the upside, or we want to look for a break below your previous day lows, a retest, and a continuation towards the downside. So we can have these levels marked out, and now we can play out the tape. So you can see right here, price has a fairly strong push towards the downside. Currently, we're underneath your previous day's lows right here now as well. As always, you can mark this out as an area, right? I personally like to draw this out as an area. It gives you better opportunity. There's more confluences, and it allows you to not get faked out on these break and retest levels. So you can see right here, we have displacement towards the downside underneath your previous day's low. So what we're going to be looking for is now the retest of your previous day lows for continuations towards the downside. And you can see right here, price got above your previous day highs, but never broke trend structure. We got back underneath your previous day's low. So now this is where we can go look to short, with a stop just a break above, and we can look to target. In this case, right, you can target your swing low. If the risk reward isn't in favor, right, you can target a 1 to 2 towards the downside. So now we can play this out. And you can see price, right, once we got back underneath your previous day lows, we had that nice push towards the downside here on the QQQ. So now let's go on to another example of the previous day high and low break and retest. So as you can see, we're on another example here on the QQQ, and what we're going to mark down as always is your previous day's lows. We're also going to mark out your previous day's highs as well. If we're bullish, what we'd like to see is a break above your previous day highs. Use this as a retest for continuation towards the upside. If we're bearish, we want to see price break underneath your previous day lows for a move towards the downside. So as always, we can mark out this general area, right? We're going to draw out areas of support and resistance, and we're going to drag this over. And now we can play out the tape. So as you can see right here, coming into market open, we're having a big push towards the upside above your previous day's high. So what we'd like to see now is the retest of your previous day highs for that continued push back towards the upside. So if we zoom in a little bit here now, we'll look for that retest. And you can see price, right, we're coming back to retest this level. You can also see that the buyers are now stepping in off your previous day's highs. What we like to see now is that continued push back towards the highs. You can see we get that nice confirmation candle. That's where we can look to get in, risking off the swing low, and we can look to target, as I mentioned, right, either the swing high or a 1 to 2. As I talked about earlier, I'll talk about entries later in a bit as well. And you can see right there, price ended up having a super nice break and retest off your previous day's high for that nice 1 to 2 risk reward ratio back towards the upside. So now let's talk about the opening range break and retest, which is my second entry model that I look for intraday on the lower time frames. So now I want to talk about the opening range break and retest. The opening range has been around for a very long time. I never heard anyone talk about the opening range break and retest. I made a video on it a couple months ago and it did crazy well. And now a lot of people talk about the opening range break and retest. So essentially what it is you want to mark out the first candle of market open. This can be on the 1, the 5, the 15-minute time frame, whatever time frame you're on. You want to mark out the first candle of New York session open. You want to mark out the high and low. All we're doing is looking for the break above, retest, continuation towards upside. If we're bearish, we look for a break underneath your opening candle range low for that continued move towards the downside. So now I can mark out the key levels and play out the tape. So you can see right off the bat, we're breaking above your opening range candle. You can see there's also displacement as well. I'm going to talk about displacement a little bit more, but you can see now what we'll be looking for is the retest off your 493 for that continued push back towards the upside. So you can see price comes back into our level. That's where you can go long. With the stop just to break below, you can target your key pivot high and a 1 to 2. And see right there, price end up having a nice push towards the upside. Essentially what this is another form of a break and retest. This is on the smaller time frames. Whatever direction that price wants to go, generally speaking, right, it's the opening range break. So if price moves higher, right, it's going to have to get above your opening candle print or your opening range. If price wants to head lower, it's going to have to break underneath your opening range and head towards the downside. So that's why this setup works so well, is because of whatever way price breaks right off the bat. Generally the speaking, right, that's usually where the market is going to trend for the day. So now let's go on to another example of the opening range break and retest. So right here, you can see we are back on SPY. We're going to mark out the first candle of market open. We're going to mark out the low and high, what we want to see for continuation towards upside. Break above your opening range candle, move higher. If you want to see downside, break underneath your opening range candle and head towards the downside. So we're going to mark out the opening range high. We're going to mark out the opening range low and play out the tape. You can see price so far, we have that break underneath your opening candle range low. We have some nice displacement towards the downside as well. So now what we'll be looking for is the retest off your opening candle range low for that continued push towards the downside. You can see right there, we're getting that nice reaction off your opening candle range low. That's where we can look to go short, stop just to break above, and we can look to target low of day and a 1 to 2 as well. So you can see right there, price end up taking out this swing low, also your pre-market lows as well for a very nice scalp towards the downside. So I just went over the 3 patterns on the higher time frames. I went over 2 intraday setups as well. I wish I could tell you guys that this is all what you need in order to become profitable, but that's just not true, right? Being able to recognize patterns is one thing, but being able to execute, have an edge, understand your risk management is a whole other scenario. So now I want to talk about rules within the break and retest. So we identified the patterns. Now we need some rules within the break and retest. Your entry criteria, right? Stops, targets, right? Displacement, right? Criteria to identify low, high probability conditions. These are all things I'm about to show you guys next and what you need in order to become a profitable trader. So let's dive right into that. So before we get into my entries and exit criteria, what I want to go over is displacement, right? Displacement is very important when it comes to the break and retest. And essentially what displacement is how violent of a move do we get over our swing high, right? When we're looking for the break and retest, do we have displacement? How strong of a push do we have above this swing high point? Are we displacing above that levels? Are buyers pushing above the level very strongly? And how can we identify displacement? And how can we determine price is going to be a good break and retest or not? So what we want to look for is a strong push towards the upside, right? In this case, price is displacing above this level, right? Usually forms what's called a fair value gap, right? This is the easiest form of displacement when price has a 3 candle sequence. We have a gap in the markets. Then we can look for this level to be used as support for continuation higher. And a second example is when price does not have a strong displacement above a key area. So price usually kind of consolidates above this key area, doesn't show any form of displacement. We don't have a strong push towards the upside. And a lot of times what will happen is this price will end up failing this and it ends up being a reversal. So this is a form of no displacement. When price fails to have strong displacement above our old swing high, this usually indicates that this break and retest won't be as high probability as a break and retest with displacement. Of course, there's external factors, there's higher time frames, there's other confluences that you have to look for as well. But generally speaking, if you're strictly looking at the break and retest perspective, what we want to see is a strong break above our swing high with displacement in forms of a strong buying pressure above that key area. We want to look for the retest for that continuation towards the upside. So this is what we want to look for. So now let's go into the charts and see exactly what this looks like. So we're back on the QQQ chart here. If this chart looks familiar, I talked about this example earlier. This is essentially your opening range break and retest. I have the high of the candle marked out, I have the low of the candle, and what we wanted to look for is displacement. So as we play the tape here, you can see that price has a very strong candle closure above this opening candle range high. So this is what's called displacement, right? You have a strong candle closure above that level. You can see price is displacing above that level. That's why we can look for the retest of your opening range candle high for that continued push towards the upside, because we have displacement and we also form what's called a fair value gap, as you can see right here. So we have displacement, we have a fair value gap. What I'd like to see is this area now be used as support for that continued push towards the upside. And you can see right here, as we played out the example earlier, price taps into our level fairly nicely, and then we end up having that push back towards the upside towards this swing high for a 1 to 2. So this is a good example of what displacement looks like. When we have a strong candle closure above that level, that's when we can look to go in for a break and retest for that continuation towards the upside. Let's go into an example where price does not have displacement. So we're on another example here, and we're going to use the 1 minute opening range break because it's nice and easy. Everyone can mark this out. So now, of course, what we're going to be looking for is a break above, continuation towards the upside, or we're going to be looking for a break underneath your opening candle range low for a move towards the downside. So we play the tape out here. See that price, we have not had a candle closure above that level so far. So now we finally have that candle closure above your opening range high, but you can see this candle, right? Pretty big upper wick. We barely close above high of day, and you can see the next candle, we're already back at this key retest level. So essentially, this is your opening range break and retest, right? What we look for is a break above, retest, and we look for a continuation back towards the upside. But in this case, we don't have a fair value gap. We don't have strong buying pressure above your opening candle range high. We didn't have a strong candle closure as well. So what happens, right? If we take this position long, as you can see right here, and we target high of day in a 1 to 2, what happens? Price ends up getting stopped out. And the reason being is because we didn't have displacement. If we have displacement, that's one of the criteria that we look for a high probability intraday setup for the break and retest. If we don't have displacement, we usually like to stay away because displacement is very important. So now we're going to be going on to entry criteria. This is one of my favorite parts of the break and retest, understanding when to enter, right? The different types of entries on the break and retest and which one fits your personality. So now let's get right into it. So now we're back on the NQ chart. I went over this chart a little bit earlier in my previous examples, and I want to talk about 3 of the different entry models that we can look for. So essentially, there are 3 entry models. We have aggressive, conservative, and then we have our most conservative. So first, I want to talk about the most aggressive entry model being a limit order. The pros about the limit order is that you're going to get in every single time. No matter what break and retest you have, if you have a limit order sitting at your previous high turned into support, you're going to get in every single time. So in this case, how to place the limit order is that as soon as price enters back into your zone, you have already a limit order setting there. Your risk is your swing low, and you're going to look to target basically this swing high, which is a 1 to 2. So as soon as price breaks above the swing high, which is your previous resistance, right, turn into support level. As soon as it taps into your level, you buy and you look for that continued push towards the upside. So this is the most aggressive, right? This comes in form of a limit order, right? In my personal opinion, this one has around a 40% win rate. So it has around a 40% win rate. I personally don't like it as much, but the pros about this is that you're going to get into every single move no matter what. So now I'm going to talk about your second one, which is strong price action. So this essentially means any sort of buying around your break and retest level. This can come in forms of green candles. This can come in form of a hammer candle, right? No matter what, right? It's essentially waiting for the reaction around the break and retest. So in this case, you can see price breaks above, right, comes back and retest. Right off the bat, you have a pretty big push right down in towards your break and retest level. What you can wait for, right, if I kind of zoom in here, you can wait for strong price action. So in this case, you can wait for either your first green candle, right? In this case, you can wait for your first green candle, risking off of the low of the break and retest, targeting back towards the highs, or you can wait for the first sign of buying pressure, which is a hammer stick candle, right? This is one of my favorite entry models, is you wait for that hammer stick candle to form, you get in on that next candle. Risk now is a break below this hammer stick candle. So a good thing about the conservative and the most conservative is that instead of blindly buying right into your key level and risking off this swing low, what we can do is risk off of this new swing low, which is the swing low that should be protected. So in this case, instead of your stop being all the way down here, right, your stop can now be your swing low, which is the new low that it's formed after we put in this hammer stick candle, and we still can look to target the same, which is your swing high or your double top all the way back towards your upside. So this is another way you can enter in the markets, is waiting for strong price action, either being a green candle or a hammer stick candle around your key levels. And then the last one is basically the most conservative, which is waiting for that confirmation. So waiting for that confirmation candle, what it gives you is a higher win rate. So in my back testing, what this gives you is around a 60 to 70% win rate. But what happens is that you have a lower risk to reward ratio. So essentially what waiting for confirmation means is that after you have the reaction around your key level, after you see that buyers are stepping in, you get in once you have a green bullish candle. So in this case, right, we have that buyers that step in off this key level. You wait for that green confirmation candle, and then you get in once that green candle forms. You can risk off of your swing low, and you can look to target the same entry as well, which is your swing high, right? This is the most highest win rate. And in this case, of course, as I talked about, right, you're going to have the highest win rate in this one. The risk to reward in this case is going to be a little bit less because you're waiting for extra confirmation. In this case, you'd be looking for highs, which is not even a 1-to-1. And you'd also be looking for at least a 1-to-2. So you'd be looking for your swing high, and you'd be looking for a 1-to-2 as well. So this entry model, the most conservative, is waiting for confirmation. This is personally one of my favorites, just due to the fact that you do have that higher win rate, but it all depends on what type of trader you are, right? You have to back test this yourself. So there's 3 different entry models here. I can't tell you which one's the best. It all depends on what type of trader and what type of trading personality that you have. So now, since I touched up on the entry models, let's go into some of the trades that I took in real time with my community. So as you can see, we're on my first example here, and this was on Apple. I talked about this last week actually, but this is on Apple, an A+ setup towards the higher time frames. Ended up making over $8,000 on this one, only risking $1,900 with a 4.31 risk to reward ratio. So now let's go on to exactly what I was looking at on the higher time frames, my entry model on the lower time frames, my stops, my targets, and exactly what my whole thought process was. So now we can put it all together. So you can see right here, I'm on the 4-hour time frame on Apple, and you can see see what we're forming is a flat top break. So I talked about this a little bit earlier. This is what I like to look for on the higher time frames. You can see we have a lot of built up liquidity here. What I wanted to see coming into market open, a break above your 232 retest for that continued push towards where the all-time highs, which is the swing high all the way back here. So you can see in the pre-market coming into market open, what we have is a strong push above our triple top flat top break on the higher time frame. So you can see we're displacing above this level in the pre-market. Now what I like to see is the retest of your previous resistance turning to support for that move back towards that all-time highs level. So now coming into market open, you can see I have the first 5 minutes played out. We're retesting our key level, which is our 232.97, or break and retest on the 1 hour, the 4 hour, the daily time frame. Now we're going to be looking for a continued push, right? Our intraday setup for a move back towards that all-time highs. So if you go back onto the 1 minute time frame here, you can see that price, what I had marked out was our opening range high. I also have marked out your opening range low, and you can see that price is now breaking above your opening range high. So you can see right off the bat, right, price is now displacing towards the upside. We have that strong candle closure. We're now retesting our opening candle range high. This is an immediate rebalance. That's where I look to go in long with a stop just to break below. And in this case, where am I looking to target? I'm looking to target that all-time highs level. So based off of the higher time frames, where we have a higher time frame break and retest, we even go into the lower time frames. We have a lower time frame break and retest setup as well, which is your opening range break on the 1 minute. So we have basically two break and retests in one. We have the higher time frame flat top break and retest pattern. We have our opening range break and retest on the 1 minute time frame, and we have our clear stop and play, which is a break underneath the break and retest level with clear targets above being your all-time highs level. So this for me was an A+ setup, and you can see as I play out price, we have a very nice push towards the upside, really right towards our all-time highs level. Ended up being a beautiful trade. If you want to have a more in-depth breakdown of this trade, I broke it down last week on my live session. So now let's go into another example that I took as well. So this is my second example that I'm going to be showing. This was on ES towards the downside. Ended up making $2,400 on this one. Ended up risking around $1,000 for a 2.05 risk to reward ratio. So now let's go into the charts to see exactly what I was looking for intraday. So you can see we have the first 5 minutes played out here on the ES, and you can see we actually just took out your all-time highs level. We're going to mark out our opening range candle. So we're going to mark out our opening range candle, where we're going to be looking for upside, of course, in this case, right? It took out all-time highs. You would have to wait for a break above your opening range candle for a move higher. Downside, more likely, since we took out the liquidity, right? We have a gap fill towards the downside. So I'm going to be looking for shorts underneath your opening candle range low on the 5 minute time frame. So you can mark out the opening candle range low, you can mark out the opening candle range high, and now play out the tape. So you can see price, fairly big push towards the downside right here. Now we're going to be looking for the retest off of your 509 for a push down towards your previous day highs and your gap fill as well. Now we can go into the 1 minute time frame. You can see price, we're coming back towards your opening range on the 5 minute time frame. As I mentioned, there's 3 different entry models. You have the limit order, which means as soon as you limit short, right, you go in with the stop just to break above, and you look for that low of day and that gap fill towards the downside. In my case, what I was waiting for was that confirmation. So in this case, right, this is the first sign of bearish price action. Right, this is conservative, and what I personally waited for was actually the most conservative. So in this case, once we rejected off this level, as this candle was forming, I ended up getting in off this candle, right, with a stop just to break above. Where I was looking for was essentially your previous high of day, and I was also looking for that gap fill as well. So this is what I was looking for. In my case, I had the most conservative entry, which is essentially waiting for that confirmation candle. In this case, my stop can just be a break above that level, and now we can play out the tape. So as you can see, price ended up coming down, taking out my first profit target, which was your previous day highs. I actually ended up getting stopped out the rest of my contracts. It eventually filled the gap, but I ended up getting stopped out before that. So yeah, with that being said, I went over everything you need to know about the break and retest. I went over the higher time frame patterns. I went over the lower time frame setups that we look for, the displacement, right? Different types of entry models that we can use, stops, targets, what to look for in trading, right? If you guys go and back test this yourself, this is just one part of the video, right? You guys aren't going to be profitable by just looking at this video. You have to go back in, back test this, find an edge in the markets, right? This is just strictly just based off of technical analysis as well. We're not even talking about psychology, but With that being said, I hope you guys enjoyed that video. I put a lot of time and effort into this video. So if you did enjoy it, I appreciate if you guys drop me a like and sub. And with that being said, I'll see you guys next week for a brand new video. Peace.